Hey guys, welcome back to the channel. In this video, I'm going to share my market predictions for the remainder of 2025 and how I'm positioning my own personal portfolio. I'm still a small growing YouTube channel, guys, so if you like the content, please don't forget to smash that like button. If you're new, hit subscribe so you're alerted every time I publish a new video surrounding finance news, stocks, and investing. All right, with that out of the way, guys, let's just get right into it, all right? So I'm going to share with you guys my market thesis for the remainder of the year, okay? This is what I believe is going to happen, at least by the end of the year, okay? Now, you have to take everything I'm going to say kind of with a grain of salt, all right? This video may not even age well, and I could be completely wrong, all right? But this is how I see it, kind of just based on all the research I've done and all the videos I've watched and all the interviews I've watched. This is what I think is going to play out for the remainder of the year. So I'm going to give you guys a couple articles and then some of my commentary along with that. And then, I will show you guys, kind of my portfolio and the way it's, structured so you guys can understand that. All right. Okay. So let's just dive into what the market thesis is. So I believe that by the end of the year, that we will end with new all-time highs for the S&P 500 and the Nasdaq 100. Okay, I think the prevailing thought right now is between 6,300 and 6,500. So I think we'll probably be within that range, and I'm inclined to agree because it looks like we are headed for those highs. All right, barring any black swan events or any negative news. Also, we are going to have less fear, uncertainty, and doubt for the remainder of the year. Now, the reason why I believe, this the most is because, we have a couple things which I'll get to in the tailwinds that are going to be playing out specifically with trade, our big trade partners. We have the one big beautiful bill going through the Senate right now, etc. So I think all of these are tailwinds for this thesis. Okay. And then, of course, this market right now is completely news driven. If we have good news, the market's going to go higher. All right. Fundamentals, all that stuff seem to have just got thrown out the window. Now, while this is good and this does send the stock market higher, we could have a potential pullback or a correction because, valuations start to drift, for stocks. And, when you have valuations drift, stocks tend to come down hard. All right. So maybe that'll create some opportunities in the future, but I definitely think at least for the remainder of this year, we're going to end in the high. All right. Now let's talk about some tailwinds. All right. So I believe that the one big beautiful bill that is actually going through Congress right now will get passed. And I'll be talking about all of these points in just a moment. I also believe that once the OBBB or the OBBB is passed, that trade deals will finalize and we'll have certainty, clarity, and no fear, no doubt. Okay, when we have a certain market, the market, or when we have certainty, the markets love certainty. Okay, they don't like uncertainty. So I think once that is especially with our trade partners and things like that, I think this will be a good thing. We also have the big one. This is the federal funds rate. There is talks of one rate cut happening this year, but some people are thinking that we might get 2 rate cuts. So we will see. But if we get 2 rate cuts, we're going to have a flood of money into the system, all right, into the economy. And I really believe that this will also send stocks higher along with the passing of the OBBB. All right. So if we get those 2 things done, you can bet for sure that we're going to be reaching new all-time highs. All right. Anyways, the last one is tariff implementation on countries won't be as severe as perceived. All right. Deals will be made with the big trade partners and China deal finalizing. Now, we are still technically in a 90-day pause, for tariffs. So that pause should be coming due here in the next, week or so, or the next 2 weeks. And I believe that, it's already priced into the market that we're going to have, some type of good news. We're going to have positive news. So I don't think even if the news that drops is unfavorable, that it's going to create another black swan event, i.e. another 20 to 30% drop. I personally don't believe that's going to happen. But of course, we'll see, and we'll see what happens. Now, I also believe, and this is the big one, that deals will be made with trade partners and with China. All right, the big trade partners, we have Canada, we have Mexico, and we have the European Union. All right, I believe the European Union has a 90-day pause, Mexico has a 90-day pause, and China has a 90-day pause. These are all separate trade negotiation deals that are ongoing. So I believe those will be finalized probably in the next couple of months, and then we'll have for sure a lot more certainty. And that will, of course, drive the stock market to new all-time highs. All right. So let's talk about each of these items. All right. Let me give you just a couple of kind of articles. And again, you got to take these just as surface level. This is just kind of like, just a data point. All right. Okay. So this is Trump's one big, beautiful bill. All right. And this could probably be really good for the stock market. And here's why, is the tax cuts. All right. The bill makes the Trump era tax cuts permanent. The TCJA, was it the Trump Cuts and Jobs Act of 2017? It makes that permanent for individuals and corporations. So that means that businesses will keep paying a lower, about 15% corporate tax, which would be a good thing. I don't know for certain if it's going to stay 15% or maybe spike up to maybe 20% or 21%. Who knows? Right now, it's still kind of being debated. But when companies pay less in taxes and they keep more profit, this is good for not only the companies because they're going to be doing stock buybacks or paying out more dividends, or they enter into something called business expansion, right? So all of this can drive the prices of stocks up. And I think this is a good tailwind in my opinion. All right. Second is going to be the whole economic growth thing. All right. This bill is packed with a bunch of stuff to boost investment and job creation. All right. Especially for small businesses. There's going to be deductions for overtime, tips, equipment, and the idea basically is that if business owners have more cash, they'll hire more people and expand faster, which fuels consumer spending, productivity, and boost overall GDP. Of course, there is still a lot of debate whether this is all true and whether this will work long term. I believe that at least in the short term, this will be a net benefit, for the broader economy and for the stock market. Long term, no one knows for sure, right? There's still a huge debate between big top economists. So that is left to be seen. All right. So, but that's just my thought about the, OBBB being passed and why this would be a tailwind. Now, let's listen to Secretary of Treasury Scott Bessent actually talk about the OBBB and trade deals. All right, so let's listen in.
Had a very successful lunch meeting with the senators. I think that we are on track for hopefully for a vote this Friday for July 4th for the tax bill. President is doing peace deals, tax deals, trade deals, so he's done a peace deal. I think we'd have the tax deal done by July 4th, and then we can finish with the trade deals.
How are you?
So there you have it, right? They can finish it with the trade deals as soon as the OBBB is completely passed and off the table. All right, now here's the other big one, is the federal funds rate. This has been the biggest problem this whole year. Everyone was waiting and waiting and waiting. Now, the last cut we had was back in December 2024, if I'm not mistaken. All right, so or sometime in 2024, right? We had a rate cut, and ever since then, we have not had rate cuts all of 2025, and that has been a big problem. Okay, you still have so many businesses, companies, corporations, even the government that's trying to refinance debt, but they can't because the interest rate is still very high. And of course, the Federal Reserve is stuck between a rock and a hard place because the economy is doing really well. Employment is doing really well. Unemployment's not that bad. So inflation's coming down. So why would you, adjust the federal funds rate when everything is looking great, right? They don't want to cut it too early because then that could create inflation. And they don't want to cut it too late because then we'd end up in a recession. So, what is the Fed to do? But it looks like there is a possibility for 2 rate cuts this year. Now, just to be conservative, I'm sticking with a 1 rate cut prediction. I believe we'll at least get 1 rate cut this year, and then again in 2026 and 2027. If we get 2 rate cuts this year, this is going to be huge for monetary policy. We're going to have a lot of money flooding the markets, and I believe this will send stocks up even higher. All right. So let's go back and look at my headwinds. All right, look at the headwinds. So the headwinds are pretty much risks, to everything here, right? Big macro risks. So I'm assigning this as a low probability that the OBBB will be completely rejected or changed so much that it is not a net benefit to the economy and to the broader stock market. I'm giving that a very low probability, low to moderate if you want to be conservative. All right. I'm also giving trade deal uncertainty continuing into 2026 a very low probability. Again, the trade deals are not completed. If this China trade deal right here continues, semiconductors will continue to be pressured. Companies like AMD, Nvidia will continue to have probably some type of pressure, maybe downward pressure. Maybe their share prices will come down, and that'll happen across a lot of the tech sector, right? Semiconductors, to name a few. You have Taiwan Semiconductor, Broadcom, Qualcomm, those kind of companies in there. Now, the other trade partners, again, Mexico, Canada, the EU, again, big trade partners. Again, I can't see that this will happen, but if it does, and if it continues into 2026, that will probably cause a huge market sell-off, in my opinion, because now we're creating uncertainty, we're creating fear, and this is probably going to drive us absolutely into a recession or some type of, stunted growth for the economy, which is not good. Now, another headwind that I have here is recession odds continuing to elevate because of tariffs. All right, I'm giving it to a moderate to high probability. I'll cover that here in a moment. And then further regional conflicts and black swan events. All right, so we just got over the Israel-Iran, event that occurred, and that was more or less a black swan event. It dropped the market just a little bit. It didn't really, drop us down a lot, but it did drop us down nonetheless. The black swan event of the year was the tariff tantrums that we had, or Liberation Day / Liquidation Day, where we saw a decline in the stock market as bad as 30%. All right, that was horrible. I can't see us having another one of those this year, but again, it is possible, and you have to, structure your portfolio accordingly. So I'm assigning a moderate probability. And then, of course, we have the commercial real estate collapse due to interest rates staying elevated and the 10-year. I'm giving this a moderate probability, which I'll cover here in a moment. And then, of course, sticky inflation or stagflation, which is inflation plus slowing growth over the next 12 months, which will definitely drive us, again, further into a recession scenario. All right, so let me share with you guys some articles of what I think, is kind of important to these headwinds, right? And again, just take this with a data point. Doesn't mean you need to sell your whole portfolio right now and flock to bonds. All right, so JP Morgan, you have Goldman Sachs, you have a couple other these, institutions that have published papers and forecasts predicting that there will be a recession in the next 12 months. Okay, so you guys can check that out. Again, they have to think in a worst case scenario because they're managing, billions and billions of investor money. So I can see why. And they give you guys, or they give us, some decent thoughts about this, specifically with regards to U.S. tariffs on the rest of the world. That was really what can drive us into a recession, slowing growth and that type of stuff. But of course, if we get these trade agreements taken care of, if it's a net benefit to the economy, if it's a benefit to the United States, then I could see us averting the probability of a recession altogether. But of course, I'm just a YouTuber. I'm not a macroeconomist of any sort. So of course, do your own due diligence, as they say. All right. We also have commercial lending crisis. Now, this is a big one. In the United States, we have about $1.2 to $1.3 trillion worth of mortgage debt coming due this year. Okay. A lot of banks have distressed loans. There's a lot of real estate out there going into distress. They can't pay off that mortgage. They can't refinance their mortgages because the interest rates are still too high. So this is causing the banks to hold on to those loans and do what's called an extend and pretend. When they do an extend and pretend, they basically just say, okay, we'll just continue holding it, make the payments as you can, and we'll just continue holding the debt, for the next 2 months, 3 months, 5 months, 8 months, a year. And they're doing an extend and pretend, which is not a good thing, okay? Because banks don't want to own these buildings. They don't want to hold on to these buildings right here. Like holding onto a big office building or a big multifamily property, the banks aren't equipped to do anything with that. So they'd have to sell it probably pennies on the dollar. So they don't want to do that. So by extending and pretending, it gives the operators time to basically get their buildings, operating optimally and then paying off that mortgage. Hopefully we get lower interest rates so they could refinance that debt, get out of those loans, or probably sell the properties. Okay. So again, commercial real estate, if this was to collapse, this would have some huge ripple effects across the entire U.S. economy. This would be almost a 2008, 2009 crash, all right? A similar crash where we saw the entire stock market dropped by 50%. So this is still a possibility, not to scare everybody. I'm invested in a lot of REITs. And of course, I could feel the pinch for sure. Now, we also have a huge asset manager predicting that, we could be heading into stagflation, right? Into a stagflating environment. And he basically goes on to say that the risk of stagflation still hangs over the U.S. Economy. The Apollo, which is an asset manager, a very huge asset manager, chief economist pointed to lower growth and higher inflation expectations due to the tariffs. And the top economist had several other big calls in the mid-year outlook. Okay. And, here's some of the reasons. GDP will more likely than halve from its peak last year. So GDP, gross domestic product, if that drops, for the United States, that is really, really not good. Okay. GDP growth will most likely slow to about 1.2% in 2025. Slow estimated that reflects economic growth being slashed by more than half compared with its peak in the third quarter of 2024, when GDP expanded 3.1% year over year. So this definitely would not be good. GDP declined by 0.3% in the first quarter of 2025. That was horrible, right? That is horrible. That news actually just came out not too long ago. We also have inflation remaining above the average in 2025. Now, luckily, inflation is at a good level. Okay, I think it's at hovering at 2.1%. However, we will see how it finishes off the rest of the year. If it continues to steep up, then that's how we know that the tariffs had a negative impact on the economy and we have inflation on our hands. And by having inflation, now we have to fight that, and that's going to paralyze the Fed, all right? That's going to paralyze the Federal Reserve. So again, that is just a risk. We also have unemployment rising through 2026. Of course, if we have a slowing economy, we're going to have less jobs created. We're going to have less people working. Companies are going to have to lay off people. So this could be a nightmare scenario. This could be that recession scenario, and which would not be good, all right? We also have the economy still facing a recession as soon as this summer. So I don't know if I, 100% agree with this one, but they still say that the chances are at 25% over the next 12 months. So again, we will see how this happens or what comes of this over the next, couple of months, as, things start to get clear, as more certainty comes to the market, and as, more trade agreements are hopefully finalized. And I think, again, once those trade agreements are finalized and the OBBB is passed and federal funds rate comes down, I think we're going to be in a very strong position, at least for the United States. Okay, so we will see. And of course, this will seep into the U.S. stock market, which will send the U.S. stock market flying higher. Now, this just dropped today. All right. U.S. economy shrank by actually 0.5% in the first quarter of 2025 amid tariff uncertainty. Okay, and this was just published. All right, this article for stagflation had it at 0.30, and this one has it as under revised numbers
Investors
of 0.5.
on edge as markets wait to hear President Trump's decision on whether the U.S. will get involved in the Israel-Iran conflict.
Okay. So, man, get out of here. So, anyways, lost my train of thought here. So, anyways, yes, if we have this to continue, well into next year, this could spell disaster. This would absolutely start to put us in a recession. All right. Technically, a recession is 2 quarters of negative GDP growth. So there is a possibility that we already had a recession, that we already went through a recession, and now we're actually supposed to be in an economic expansion period. And that is actually what I believe, according to my thesis. I really think we're in an economic expansion phase of, for the United States economy. And this is what's going to send the stock market to all-time highs. Now, how am I preparing my portfolio for all of this? So there's a couple different things. You guys know, or may not know if you're new, that I have a bunch of REITs. I have a sector-focused ETF for technology, and then a bunch of high-yield income ETFs. Now, REITs, real estate. So I got real estate exposure. Hopefully we get lower federal funds rate. Hopefully the 10-year treasury comes down. A lot of companies will be able to refinance, their mortgages, and that will send REITs, skyward. That will definitely create a bull run for REITs. That will create a favorable environment for REITs. For a technology focused ETF like VGT, when you have cheap money available on the market, tech or tech stocks seem to do very, very well. Or again, they can borrow for less. So this would be an absolute tailwind for technology stocks. And this tech sector focused ETF, Vanguard's information technology ETF VGT, is basically all technology stocks. And then, of course, high yield income ETFs. This is kind of a whole separate thing. I have, NVIDIA, I have Palantir, but these are, weekly pay ETFs from Roundhill. Those have been doing absolutely well. I predict that they will continue doing absolutely well into the future. Now, the addition to this portfolio is this right here. Okay. And these amounts will change over time because I'm going to be adding to them, but I am including a Bitcoin strategy and I'm including Treasuries. Now, the reason for both is kind of a play on how everything's going to work out, for this portfolio. If we were to have a huge drawdown or some type of recession or some type of pullback, I will definitely need Treasuries. Okay. I will definitely need Treasuries in this portfolio because I utilize a lot of leverage. I utilize 100% of my margin. So by having an allocation to Treasuries, that will help buffer some of the downturn. Now, for a Bitcoin treasury, or excuse me, a Bitcoin strategy that I'm including in this portfolio, this is to play on the whole idea, the whole thesis of monetary policy. Okay, so much money is about to be flooded into the U.S. economy, and that is going to, in my opinion, probably devalue the dollar. Now, when you have a lot of inflation, a lot of money just flooding the markets, it would be prudent to have some type of exposure to Bitcoin, okay, or some type of exposure to gold or commodities or something else, right? So I'm going with a Bitcoin strategy, and I'm going to be making videos specifically on the Bitcoin strategy and on the Treasury allocation strategy to kind of go more in depth about this stuff. But I'm including these in my portfolio. I think now is a great time because if the stock market reaches new all-time highs and monetary policy starts to flood the markets, I predict that this will create a very favorable environment for Bitcoin, specifically Bitcoin. So anything that is tied to Bitcoin, whether it's a cover call ETF or just an ETF that is a spot, price ETF, or maybe something like strategy, MSTR, I think this will create a very favorable environment for anything linked to Bitcoin because of so much money flooding into the system. So this is just my thesis and how I predict that the market is going to play out the rest of this year. And so this is what I think is going to play out for the remainder of the year. And who knows? I could be completely wrong, and this all fall apart over the next day or so. This video may not age well, but I figured I'd at least publish this because maybe there's people smarter out there who can offer me some insight or maybe offer some thoughts on whether this makes sense or not. So I look forward to your comments. I hope you guys got some value from this video. Hope you enjoyed it. All right. Again, this is all for educational and entertainment purposes only. I look forward to your comments. I will see you all in the next video. You guys have a great day.